Hey everyone, welcome back to Streetwise Economics. If you are new here, I'm Isaac, and this is where we break down markets, investing, and trading strategies, particularly if you look at the S&P 500. And whilst there's been a lot of volatility, the bond market has been moving. The dollar has been jumping around. And yes, President Trump is back with some heat, calling the Fed Chair Jerome Powell a loser. And we'll talk about that. Now, real quick, this video is for educational purposes. I'm not a financial advisor, and nothing here is investment advice. This is just how I'm seeing the market and what I'm personally doing in my long-term portfolio. Let's start with the broader market picture. Let me pull out a chart for you to see what's happening in the stock market, the bond market, and also the currency market quickly. So let's start with what's happening in the currency market. You can see here, this is the euro, right, versus the US dollar. So in other words, the euro is the primary currency. So the euro, if you look at this couple of months, couple of days, and this is on TradingView, you can see that the euro has been appreciating, right, versus the US dollar. So if you see on these past 2 days, yesterday and today, the US dollar actually gained because you see it has been depreciating, it has been red, the euro has been declining, and you can see here that the euro actually declined against the US dollar. Now, let's talk about what's happening in the bond markets, and then I'll talk about what's happening in the stock market. Usually, the bond market, you are talking about big investors that actually then invest. They are basically buying the US debt, and this is how they actually finance some of their activities. And it is a very important indicator, especially if you're looking at the 10-year yield, and investors are forward looking. And what has been happening is that you can see that it has been volatile, going up and down. But lately, if you look at from April 7th, it has been going up and down. But today, you can see that the US 10-year yield, it actually closed 0.36 down at 4.401. And I'm going to explain a little bit more about this, what this means. Now, for the equities market, I like to use the S&P index. If you look at the S&P index here, it shows a very interesting picture in my view. If I look at what has been happening, you can see that, let's talk about what has been happening this week in particular. You can see that this week, if you look at this, it has been going up, right? You know, because you see this green. And why the break that you see here is because like it's not continuous. So this is another day, it went up and then it pulled back towards the end of the day and then went up. But then the next day it dropped before actually going up. So what is very interesting here is that you can see that most of the tech stocks that I follow here, they've been green. And I'm going to explain and make a comment on that, but I just wanted to provide you with some background of the basis of my explanations. So now let me now describe a little bit of what I was showing you on the charts. So the big headline that rattled the market yesterday was President Trump's latest comments calling Fed Chair Jerome Powell a loser. Now, whether you agree or not with that, the market does not like uncertainty around the Fed. It's a very important institution because they set the monetary policy, basically money supply and also the interest rates, which can really determine the cost of borrowing and, in that case, the overnight rates, interest rates. So why the Fed, like I said, the interest rate policy is everything right now. 1 minute, we are expecting the rate cuts in June. The next, the Fed is saying we are going to be data depending. And now you toss in this political pressure that spikes volatility very fast, in my view. Meanwhile, we have got tariffs back on the spotlight. JD Vance, vice president, is actually in India today, and I saw on Bloomberg that he was indicating that there are some good news, that they are working on some good trade deals between the US and India. So the US is now pivoting towards, bilateral, conversations to reset the tariff conversations. And Japan is also on the few and on the fore, and other countries around the world, except China, which has been actually standing his ground to say there has to be mutual respect before we even talk about these tariffs, because China is a sovereign country and they actually have a big part of their some of their money in the bond market, so they can actually rattle the market, because if they start selling, even though they can take a hit, but they can really move the stock market here in the US. And Japan, actually, from what I last researched, is actually the uh, country with the highest value of bonds, US bonds, treasury bonds in particular. So that's something that has been happening. And this is something that is putting more pressure, especially on companies such as Nvidia. Tesla is recording earnings today, Apple. So I've been trading very carefully on that, because things can really get so bad very quickly. So what's happening in the bond market and the currency I have just shown you? In the bond market, the treasury yield, it dropped sharply yesterday, like I said, and then bounced slightly as the equities found their footing. But the key is that lower yields typically signal fear, right? But it's more nuanced than that. What we are really seeing in the bond market is reacting to the rate of uncertainty. If the Fed is forced to stay hawkish longer due to tariffs, stock inflation, that could mean fewer or delayed cuts, which keeps the curve jumping. That's something that the investors are closely watching. Now let's talk about currency. The US dollar, usually I like to look at it versus the basket of currency, DXY. It surged, like I showed you, versus the euro, that the past 2 days it appreciated against the euro. But why does this matter? Because strong dollar typically puts pressure on multinationals. Think of companies like Microsoft, Apple, Booking, which earn in other countries. So current volatility adds a risk premium on global investing, which brings me to what I've been doing personally. So the strategies that I've been using lately include, sorry, um, adjusting my long-term portfolio. And again, this is what I'm doing, not what you should do. Always do your own research before jumping in or investing your money. I've added my position on Mercado Libre. I love the growth potential in Latin America, and I think this company has stay power even with short-term volatility. So I kind of like see it like the Amazon of Latin America, even though it also is some global exposure. I've added on Booking Holdings, and I see strong travel demand continuing, especially in Europe as they enter the peak travel season. I topped up on Microsoft, which, sorry, I already have a big position, but with artificial intelligence and cloud continuing to lead, I wanted to nibble more on this tip. Beyond that, I'm still running my cash flow strategy using options, covered calls, and cash secured puts. These are my bread and butter strategies so far. They have been helping me to generate steady income even when the markets are actually going sideways. I will share an update on how my recent trades are going in the next video that's dropping on Monday. So definitely subscribe if you want to catch that. What this means with volatility is that, in my view, for me, it means that I have to participate in this, but carefully, because just watching on the sidelines or being unsure, it can be a good strategy, but there might be opportunities in this case. For me, it means we are in a transition period. And the transition, which is in this case indicated by the volatility, if I'm right in the positions that I'm taking, let's say a year or 2, 3 years from now, nobody really knows for sure, then I'm going to make quite a bit of money. But in the meantime, like I said, I'm going to be using options to capture this volatility. So This volatility for me doesn't mean I should panic. It means opportunity, but only if you have a plan. So the tariff headlines, they tend to be short-term noise, but they do create a risk for sure in certain sectors. So I'm particularly leaning on stocks that I understand with high convictions, that have strong balance sheets, and that are, in my view, less likely to be impacted in a big way by these tariffs. I could be wrong, but I'm playing with my money here. So I'm doing a bit of research, and hopefully things work out well. Trump versus Powell political pressure on the Fed increases uncertainty, which means that the bond and the equity market may be more reactive. So if you're a long-term investor, this is the time to zoom out, in my view. That's why I'm sticking to my high conviction names, like I indicated, using options to stay active without betting a lot of money. I'm, however, aware that there are risks in the market, like I said. So I am navigating this carefully, keeping a little bit of cash, only investing in solid stocks in terms of fundamentals and products and services that they provide, and also keeping an eye on the macroeconomic updates that are happening, not only in the US, but globally, that I consider to potentially affect my positions. So that's what I'm seeing this week in the markets: volatility, political heat, and some opportunities under the surface. In the next video coming out on Monday, I'll be breaking down my trading journal, what worked, what didn't, and how I'm positioning myself for the next move. So make sure you hit the subscribe button as well as the like on this video, and drop a comment below if you are watching from Canada, the US, Zimbabwe, or anywhere around the world. This is Isaac signing out on behalf of Streetwise Economics. Here we talk about smart strategies, global investing, and building income step by step. So thanks for watching. I will see you in the next one. And like I always like to say, trade and invest wisely, and may the markets be on your side. See you in the next one.